Peace everyone, back with another weekly forecast highlighting the key levels and what I'm expecting over the week ahead. As always, I'll be going over the same structure that we follow on a weekly basis, starting off with some fundamental overviews and leading into technical analysis and key levels that I'm expecting on the same charts that I cover on a weekly basis as well. We'll start off with the economic calendar going into this week. So there is a few high impact news coming out throughout the week. On Tuesday we can see there's a couple GBP reports coming out which potentially could have a little spike in the markets. Other than that, there isn't too much coming out of Europe and UK. Of course, we have the Russia and Ukraine tensions, which I'll also be going into a bit further on in this video. Now, on Wednesday, we have a couple more high impact news coming out of the US, a couple reports, and there's a couple speeches coming out as well. Last week, I mentioned there was some important news coming out of the Bank of Canada, but of course, that wouldn't affect the pairs that I cover in this free weekly forecast, shall I say. So reason being, we don't cover that sort of thing. If you do want to get access to the full overview of all of the currencies and the full fundamental overview, make sure you get into contact with us on Telegram. Link will be below. Furthermore, on Thursday, we're expecting a couple more speeches as well out of the US, and also a bit of high impact news in terms of jobless claims. We've got also, what else have we got? That looks like about it. The fundamentals in terms of the economic calendar isn't looking too influential over this coming week, and overall the main influence will be the tension between Russia and Ukraine. Now let's get into the dollar currency index and see what we was expecting last week. So as always, the blue dotted lines represent previous week's highs and previous week's lows. The green ascending lines and red descending lines represent trend levels in the market according to the first market cycle, which is done by the Wyckoff system. And also we have key levels set on the right hand side, which represent many different confluences in the market as well. Now last week the value ended at around this level right here. I set the previous week's low, and throughout the previous week we saw that the value was trading between the previous week's high and the previous week's low. Sorry about that, guys, I'm getting a little cool there. But yeah, this week we're looking for the value to continue this potential consolidation phase that's going on, and at the same time looking for potential bullish moves going forward. Yeah, where we can, I'll show you a nice entry point that we could have done last week. It would all be based on the Fibonacci retracement tool. Wrong tool. We could have just popped it at this previous week's low and the previous week's high, and as you can see here, guys, we had one touch here, the low was made. That was 2 weeks ago, and on the previous week this retest happened again of this same level, and if we put the retracement tool, we will see that this level falls perfectly at the 78.6% level. Now this is a regularly occurring thing. If you go through our Telegram group, you will to see how many times the market actually respects the 78.6% level. Overall, because we've actually found respect here now, we could be looking for buys up to the 28.2% level, which will fall at this key level which I've set right here at the 96.75 value. Now, other fundamentals that we're looking at this week will be the Ukraine and Russia tension. Yesterday night, Saturday evening, Biden had a conversation with Putin. According to this, the conversation went on for about an hour, and Biden did mention that the US will get involved if Russia decide to actually invade Ukraine. So this is obviously building tension, and we will see a reflection of this throughout the market as we go into this week. Overall, that's the main thing that's going to be influencing the market this week. So very high volatility, especially when it comes to the Forex pairs. and overall trading will be very high risk this week, in my opinion. Reason being, I'm gonna just be spectating and sort of giving you updates based on the new information that we receive throughout the week. So let's just get straight into the technical analysis now. I'm going to get into the market sentiment as I go through the technical analysis. So as I mentioned, this week we could be potentially looking for the increase in the pound value. So as you can see here, the previous week's high, we could wait for a break of this value, set the stop loss just above the previous 4-hour low, and we could expect something along the lines of this. So we would expect like a break, some sort of consolidation phase, a little retest back to the entry level, and then value to go up to the 96.75% level. The value of 96.75, shall I say. Okay, so what I want to do next is actually go into gold. So last week I mentioned that we're looking for further bullish moves in gold. Overall, over the last couple of months, we've been seeing major highs and major lows, higher lows be created, showing great indication in terms of building value for the price to break up to brand new highs, get back to these levels that we was seeing quite a few months ago. I won't rewind too much into that. I will be sending this screenshot on the Telegram group as well for you to keep updated with it. But overall, gold is creating higher highs and higher lows, which is very healthy. According to the fundamentals, there's been a lot of fear created in the markets. So investors will naturally be going towards safer assets such as gold. We could also even add silver into the mix when it comes to looking for safer assets. But overall, as fear increases, we should see the value of gold increase as well, because people don't want to be dealing with these volatile charts. They want to be sure of where their money will be sitting, and sort of the risk tolerance that they use will definitely be overridden by the fundamental news coming out this week. So what am I looking for? I'm looking for either potential consolidation between previous week's highs and previous week's lows, or I'm looking for a break above the previous week's high, retest back to the break for a new entry up to these key levels which I've set on the right hand side here, all the way up to the 1916 potentially. If that does occur, that would be about a 500 pip move, which is very nice. So if we can catch a 500 pip move, we'll be looking at least a 1-to-5 risk to reward ratio on that. Next, I'm just going to run through the pounds against the dollar and also the euro against the dollar. Now, if I go on to something that I don't usually cover on this weekly forecast, which is the euro index, you can see here that euro index is actually creating a bearish momentum, and this is reflected on the charts as well. So if we pop back onto the EURUSD chart, you'll see that it's basically a mirror of what's happening on the index by itself. Now we can also look at the euro against the dollar sentiment. This week we're looking quite neutral. This shows that there's manipulation going on in the market. What I'm expecting is if the dollar does continue to increase in value, we would expect the euro to decrease in value as this tension arises, and drop all the way back down to these key levels which I've set here on the right hand side. Of course, we follow the 100 pip rule on euro against the dollar and pounds against the dollar as well. This is a proven method that's been going over 20-25 years now. So keep in mind these key levels which I've set on the right hand side. If you're looking to enter new leverage positions, any break of this previous week's low, a retest back to the previous week's low, will be the best, lowest risk, highest reward entry points for euro against the dollar. Now, pound against the dollar, it's quite contrary, to be honest. So as the dollar increases in value, we are seeing the pound also find some increases in value as well. Not the most rapid increase, but we're seeing bullish momentum rise. Now, if these both do continue moving positively with each other, we could potentially see further continuation up to these key levels which I've set here. Overall, GBPUSD and EURUSD this week, I'm not going to be trading it due to the fundamentals that's actually going on. This Russia tension and Ukraine tension is building a lot of sort of fear. This basically is a great indication for us to move on to other assets. I'll highlight some of them for you guys. It's not something that I usually do on the weekly forecast, but let me make this a bit bigger for you guys as well, and we could pop onto such things as the energy index. As you can see, the energy index is increasing in value. These tensions last week made this increase in value, showed us this spike. Also, I can pop onto other energies such as oil. So if I find my oil chart, we can see that there's massive increases in oil as well. So the more tension that builds, the more increase in sort of retaliation or sort of setting pace for what Russia is planning to do. We will see energy values increase 100%. We can already see this getting reflected on the market. I would say that if the tensions start to calm down, this is when we will see a reversal in these markets or a correction of these bullish moves that have already occurred due to the tension and the fears going on. But yeah, let's get back to the charts. So Forex, very volatile this week. I'm not looking to do too much. And we'll just go straight into Bitcoin now. Now Bitcoin has been quite nice, to be honest, over the last few weeks. We've seen a lot of fundamentals actually come out, and we've seen that Bitcoin has gone against the grain and not reacted to these fundamentals such as the interest rate hikes a couple of weeks ago, and over this week as well we found out that interest rates have reached a massive high of 7.5%. It didn't affect the Bitcoin value too much. Overall, I want to say that this low that was created at the 88.6% level are manipulated Fibonacci level. I went over this in the last few weeks analysis, so make sure you go over that if you want to find out a bit more about it. How we caught this low, it was very accurate in terms of the retracement of the most previous bullish run that's occurred and what we sort of expect in the upcoming weeks. Now, what we could potentially see right now is if we go down to the hourly chart, if you are a bullish bias on this right now, I can guarantee you that people will be looking at new bullish entries from this previous week's low to this previous week's high at this 78.6% level. So you know where I've set this at around the 37.3 will be the key level for us to see if this bullish bias does follow through and if there is actually that bullish pressure in the market. If not, I'm looking for bearish continuation, as I mentioned last week as well. I'll be keeping you guys updated throughout the week as well. After the market opens, we'll be able to get a clearer idea of what we're sort of expecting. But yeah, we know where the liquidity lies now in the charts. This is very healthy for us to know. So of course, below this 88% level, there is a lot of liquidity. We know this because of the bullish moves that's occurred from here. It gives us a nice indication to see where the whales are and the big money lies. So if the value does come into these sort of zones, this could be very high liquidity zones for the next breakouts that we see. Overall, we'll keep you guys updated. I saw an actual interesting article about the Bitcoin going against the grain in terms of inflation as well. I'll put that on the Telegram group. Make sure you go follow that. Trading Capital Network Public, absolutely free group, highlighting all fundamentals that we receive and also technical analysis. Finally, I'm just going to move on to Ethereum against the dollar. Now, with Ethereum against the dollar, it hasn't been holding as strong as Bitcoin. Before we go into Ethereum against the dollar, let me show you Bitcoin dominance right now. So Bitcoin dominance is on a rise. We're sitting at around the 43% level. Last week I showed you this, guys. If we just see the last week's. So what we could do here is just put key levels at the previous week's highs and the previous week's lows, and it gives us an idea of what the value has been doing. So Bitcoin dominance is increasing. Any retest back to this 42% level will be healthy. As long as this continues increasing, I'm looking at this as a very healthy sign for the Bitcoin liquidity to be grabbed underneath the 88.6% level. This also should reflect on the Ethereum chart as well, and follow into the altcoins as well, as usually the dominance builds up on Bitcoin and then the money flow just gets run through the rest of the coins after Bitcoin, Ethereum, and the major other layer 1 cryptocurrencies such as Solana, Polkadot. We got XRP, we have Stellar Lumen, and then into like the smaller altcoins. And now of course we're seeing trends of gaming cryptos come into play, so, and also NFT projects, and also decentralized autonomous organizations. This is the way the money flow will go into the Bitcoin. So dominance, we want to see it continue in increasing in value, and hopefully over the next few weeks we'll see the dominance come down a little bit as we see money get pushed into Ethereum and all the other layer 1 crypto that I just mentioned to you. Of course, if you want overview of this in-depth analysis of the cryptocurrencies and Bitcoin dominance, and also just the crypto market cap in general, make sure you get into contact with us on Telegram, as we'll soon be doing quite a few good offers in terms of lifetime access to this sort of information, fundamentals and technical analysis. So getting back into Ethereum now. Overall, I'm sticking with the bearish bias on Ethereum until Bitcoin confirms that it's reached enough dominance again, and enough money flow is coming into it to confirm that we can create further demand zones where we can catch support and increase in value. I'll be looking at Ethereum and cryptocurrencies in general as on a bearish bias. Now, I know a lot of people are buying, guys. This could be very heartbreaking for you, but I'm telling you that more of the market actually needs to get liquidated before institutions jump in and get the best discounted price for themselves. I'll be keeping you guys updated, of course, as always, on Telegram. I also want to finish with a quote from Baron Rothschild's, or was it by Rockefeller? I'm completely forgot, but there's a very famous quote out there that states you should start buying when there's blood in the streets. And what we're seeing right now, we're seeing all this tension of wars. We're seeing the cryptocurrencies already potentially 70% through this bear run that we are experiencing. And yeah, it's all coming into play, guys. We're at a very good stage right now to even be looking for potential. As you can see, look, the value is dropping right now. Let me drop. Let me drop it back to into the 15-minute chart. Value is dropping. So next key level for Ethereum before I let you guys go, of course, will be the $2,300 level, back down to the 71.8%, and then furthermore to the 78.6%. Let me make that a bit bigger for you, man, because the amount of times we've used the 78.6% level is unbelievable now. You can go onto our Telegram and check out all of the evidence. Of course, there's nothing to hide. Any sort of history you want to see based on this analysis is all on the Telegram as well, from quite a long time ago now, so it's all can be tested as well. But I'm going to be leaving it at that for you guys. It's hitting around 20 minutes, which is not too bad. I'll see you next week. I do hope you have a profitable week. and we'll be back next week for more content. If you do find it valuable, make sure you subscribe and drop a like as well. Any questions, drop them in the comments or get into contact with us on Telegram. The link will be below. Take care of yourself, guys. Peace.